Hey, good morning, guys. My name is John Davis, and I am your personal insurance advisor. And today is Teaching Tuesday, where Ben and I talk to you all about all things insurance, including health insurance, life insurance, Medicare, and retirement planning. And we're gonna go ahead and get started. Ben, how you doing today, man?
Well, John, it's excellent as always.
As always.
As always, man.
Well, excuse me, I had to get some coffee. I'm here in Nashville today, and it's cold and rainy. So I've been on coffee most of the day. So Ben, tell me, how's your family doing? How the kids, the wife?
Doing well, man. They grow up too fast.
Okay, well, my nieces and nephews are doing good. Since I'm here in Nashville, they're all running around, jumping all on me, crying, making me give them candy, and when their parents don't want me to, the usual stuff. But hey, Ben, it is Teaching Tuesday, so it's time to teach the people. But guys, before we get started, two things we need you to do. We need you to like and share our videos. If you hear something you like. If you learn something, share our videos because we're trying to get it out to the masses. Okay. So today, guys, we're going to talk about those little precious people in our lives, like the people that we get up and go to work for. We think about them all the time. They sleep in our bed when they have nightmares, all that stuff. So today, guys, we're going to talk about our children.
Oh
What do you
boy.
think about that, Ben?
Well, yeah, that's I wasn't ready for that, John.
Yeah,
I wasn't
I'm
ready for that.
introducing. This is Alicia. I just named her just now,
Hmm.
and she's a doll that I picked up from the dollar store. Here's a life hack, Ben. Instead of spending a lot of money on Christmas gifts, if you get your little kids like little cheap stuff like this, they'll like it, and the head comes off and all that stuff. But it's a doll, so
But does it go back on, John?
I think you can snap it back on. Ben, stay focused. So listen, today,
Sorry.
guys, we're going to talk to you all about insurance for our little children. Okay. So, Ben, I know you have two kids. They're amazing. I've met them, I've seen them. They're smart, intelligent, very respectful kids, very athletic. And I want you to go back, okay? I'm gonna pull you back to the time where you and your wife had little Alicia, okay? And you're laying in the bed, or Michelle's laying in the bed, and she's like, he's so amazing, and you're talking about him. At what point, and the subject today, guys, we're going to talk about juvenile insurance. At what point did you say, I want to get life insurance on this little baby? Let's talk about it.
Well, John, when I first had my kids, I was pretty broke. Probably not an uncommon thing, and I was worried about the price. And then I did a little more research, and I didn't really have to worry about the price.
Okay, why not?
Well, it's very inexpensive.
Okay. So it's inexpensive. So you were worried about the price, and I'm assuming that a lot of our viewers are worried about the price when it comes to insurance, because insurance in general, most people assume or think that it's expensive, right? But at what point, now that you got over the hump of the price, right? What made you even consider it? Like, what were you thinking was a reason to get life insurance on your kids?
Well, before I got into this business, I didn't. Nobody wants to think their child's going to die. Okay,
Okay.
and I don't think my kids are going to die. Obviously, I want when I'm long gone, right?
Mm-hmm.
So I don't want people to think of it that way. I want to have them think about guaranteeing their insurability, just in case they come up with some sort of rare immune disorder or they have problem with asthma as a young child. Getting them something today that will carry with them for their lifetime, that they don't have to be underwritten in the future.
Okay.
Asking health questions they may not be able to pass the test essentially.
Okay.
But having something there that will increase over time without having to qualify, John. That was the biggest hurdle for me, was getting past. Hey, my kids aren't going to die. Um, I need to have something in place just in case something happened to them medically in the future
Okay.
where they couldn't qualify.
Okay. Well, so you and I both know, being insurance advisors, that we get several people that call and say, "Hey, I just had a baby, or my newborn was just born. Um, what do I need to do to get insurance on them?" So let me ask you, what is usually the age range that insurance can be given? Because I've had some people that say, "I didn't know I could get insurance on my child until they were 18." What? Let's debunk the myth of the age range that you can be to get life insurance.
Yeah, it depends by the company, but there are companies that really 7 days
Oh
you can
wow.
get a policy, and some are 6 month wait, but seven
Okay.
days is usually a good number,
Hmm.
and really after they get their Social Security number is usually the right answer
Okay.
to be able to get life insurance for your child.
Okay. So I know that based on statistics, there's about 44% of people that advocate for, or 44% of people in the United States that advocate for their children to have life insurance, right? And we know, like you just said, death is an obvious reason for why people get life insurance, okay? And then you just talked about the guaranteed insurability. Well, we also have the living benefits of life insurance to kind of financially set our kids up for success when it comes to college funding, funding for their new home once they get older, all of those different things. So I want us to be really careful that we don't get stuck in the whole mindset that my kid is not going to die, and so I don't need the
Yeah,
insurance.
we should move past that. That's not the thought I want a parent to ever think about.
Right.
It's, really thinking about their future and how can I set my child up better than maybe I was set up as a child,
Hmm.
because we didn't have the same products when we were kids, John,
Right.
that
Right.
we have today. So.
So when you say the same products, explain what you mean by that.
Well, I mean, it was just a straight whole life policy. It might build a little cash value, but today we can set people up where we can help fund a college education. We can help, parents can help their kids with life insurance, with down payments on houses with
Hmm.
cash value life insurance.
Okay.
You can set them up for a guaranteed lifetime income with
Okay.
life insurance.
Okay.
And that's very misunderstood, I guess, because we don't want our clients to think about life insurance the old way. We want them to think about life insurance in today's contracts, essentially, John.
Okay. Well, guys, hey, I should have told this earlier, but remember, we are live. This is a completely interactive platform. So, as Ben and I are talking, feel free to send messages, and we'll answer those questions, and all of that good stuff. So, if you have a question that you want answered and we don't cover it here, or you don't see us getting to it, just send us a message, and we can talk about it now. So, I just wanted to let that be known. So. Ben, when we're looking at insurance, because I know you just was talking about one of your major concerns were the cost, right? How much? What's the cost for a 8-day old baby usually to get some basic insurance? Like how low can it go? I know it
Yeah.
can go high, but how low can it go to get some type of protection instead of having nothing at all?
Well, I saw you drinking a Starbucks coffee there, John. You still have that?
I do.
It's probably about the cost of a Starbucks coffee. That's probably what you're looking at to insure a young child.
Okay, so is that Starbucks coffee per day or is it Starbucks coffee per month?
For the month. Yeah,
So
yeah,
I
for the
spent
month.
$7 on this.
Yeah, yeah, and that's, I mean, if you're looking at a small juvenile whole life, that's about what it costs.
Really? So it's affordable.
Oh,
For
absolutely.
for most people, yeah. Now this right here is a grande. Now if I go up to the next level, I always get grande, but if I go up to the next level, I don't know how much it costs. But
So, John, you're
ideally,
going to the Vente.
is that the small or the big?
I think that's the big one.
Okay, so the big one, I'm assuming is probably $3 more than this one. Okay,
Right.
so we're looking at about $10 a month to possibly get insurance on Alicia here. Okay,
Hmm.
the good thing about insurance is Well, Alicia, the good thing about it is it never ends, right? So
Correct.
I can get Alicia insurance, and because it's guaranteed issue, or at the time she's 7 days old, she can keep this policy forever, right? Like she doesn't
Correct.
have to.
And the nice part about the new policies is there's certain triggers that you can actually add additional benefit, death benefit to those policies.
What do
So
you
there,
mean by that?
so there's a company out there I know of that at age 18, whatever the benefit, let's just say the benefit for Alicia is $20,000. At age 18, that's going to automatically go to 40. If it was
Okay,
50, it's automatically going to double to $100,000.
okay,
And then there's companies out there that have different triggers, maybe 5 or 6 different ages. So first time home buyer, first time you get married, and then certain age or birth dates throughout their life that they can add up to, 50 to $100,000 of coverage without answering health questions. And I
wow,
think that's the big reason people should consider that is the
okay,
guaranteed insurability. One of the big reasons.
okay, okay, good deal. So what about, we often hear and people give us a call, they say, hey, I want to get this life insurance policy so that my kid can pay for their college tuition.
Right.
Can you kind of elaborate on how that will work and how that's even done?
You know what? I had a really good case last week I worked on, John. This was a 2-year-old little boy. And this 2-year-old little boy, his parents are going to put $100 a month into the policy. And basically, at age 21, the parents can take a loan against that to start paying for college. And in this particular scenario, they were going to be able to pull out $35,000. Now, is that going to pay for all of college? No, but it's going to help.
Right.
Obviously, that number per month could be higher. They could pay for the entire amount tax free, but that's what they had budgeted, and we obviously we stick within people's budgets when we talk about these programs. But
Okay.
the coolest thing about this, at age 65, this 2-year-old was going to be able to pull out $118,000, okay, of lifetime income. He doesn't have to make any more payments after age 65. Okay.
Okay.
And basically, over the lifetime, so if this 2-year-old lives to age 100, he would be able to pull out $3 million tax free from this
Wow.
policy.
Wow.
And his parents or he would have only put in $75,000.
Mhm.
So that's a very good return on your investment tax free.
Okay. And let's take that a little deeper because I had a situation similar to that too, Ben, where when we think about, like, I did a video uh before I had you on, Ben. It was
Hmm.
on asset protection, right? And I think you and I, we talked about that before. We talked about asset protection and protecting our assets from nursing home stays and stuff like that. And
Oh,
I
right.
think, like, when we look at the kids, like, I'm a child, you are too. Nobody wants to put their parent in a nursing home, right?
Correct.
But at some point, we have to go to work. We have to take care of our own kids, all of that good stuff. By having that extra income, it opens up a lot of opportunities for me as a child to take care of my parents, right? Like, it allows me the freedom to say, I'm taking 6 months off or a year off or a couple of
You
years
bet.
off because I know that my dad and my parents have kind of set me up to be financially stable and get this continuous flow of income.
Well, and what we need to be preparing, especially younger people for,
Hmm.
is Social Security being, I mean, potentially being taxed or reduced.
Hmm.
And I mean, we're going to have to come up with solutions, I mean, on our own
Right.
for retirement. And
Mhm.
those are the conversations that we're having with people.
Yeah. Yeah. So by using our life insurance as a way to generate lifetime income that we can pull out annually to pay for expenses and things like that, it's able to set our kids up to be financially much more financially free than I
Oh, yes.
would
Oh,
be
absolutely.
or am. Yeah, yeah.
Yeah, I wish these products existed, when I was younger,
Right, right, right. Well, let me see if I have any questions. I got a couple of questions from Miss Michelle. Remember Michelle? She wrote in last week.
She
Thank
is she is a consistent follower,
She's
John.
she's
I
very
love it.
consistent. Michelle, I'm introducing you to my child Alicia. Thank you for joining us. But Michelle is asking about Gerber Life. She
Okay.
says exactly. She's asking, how about Gerber Life? Is that the same as what we're talking about? So, what's your thoughts on Gerber Life, Ben?
Well, here's my thought on any insurance company. The best insurance policy is the one you own. Okay, and Gerber Life for a child, their grow up plan is a fantastic plan.
Okay.
Is it the best plan? You own it, and that's I mean in my book, I mean life insurance, especially from a good A-rated company like Gerber that pays their claims, that's a great start, Michelle. There are other companies out there that we use, depending on the situation, that may be a better fit. But I will tell you, congratulations for thinking ahead and know, with that policy at age 18, that benefit's going to double if it's the grow up
Yeah.
plan. So fantastic job.
And the good thing, Michelle, is with being and not being insurance brokers, that you come to us and let us solve the problem. You know,
Exactly.
like you bring me Alicia and say I need to insure her and let me do it. Like you don't have to worry about going out and calling Gerber and all these different companies to understand how the policies work because it's what Ben and I do every single day. And we have access to more carriers and more products than you would even know of.
Well,
So,
and I'll give you another scenario, John.
mhm,
2 weeks ago, I had a young man, 10, had been declined by 5 different companies.
okay,
We were able to place him. He had chronic asthma, had been hospitalized from the asthma, very serious case,
okay,
and we still had a company that would pay a day one benefit. And give him all of the guaranteed issue down the
yeah,
road with no health questions. So
wow,
I always like to tell people that as well. If there's a challenging case, we have a solution for that too.
okay, okay. Well, that's a good point. Let's see. I got another question from Michael, and Michael is saying that he has insurance on his kid from his job. Now we talked about this before, Ben. We talked about the
Yeah,
difference between having your work insurance or your employer insurance, group insurance, and having your
hmm
own personal plan. So I kind of know to not depend on your employer to insure your children.
you just never know when your health's going to change, John. I'll
Right.
say that till I'm blue in the face. I mean, if you have to get insurance and now you're unhealthy, it may not be the same type of plan that you had through work. So take
Right.
control of the situation, own it on your
Mhm.
own.
Mhm.
I think is the best way to proceed. Now, obviously, buy as much as you can through work because it is typically cheaper, not always, but most of the time it is. But
Yeah.
that's something will help you weigh as well.
Yeah, and Michael also realized we talked about this in one of the other videos. The job, most of the employer benefits that you receive are employer benefits while you're employed. So
Exactly.
when that employment ends, those benefits end too. Not only your health insurance, your life insurance, which would include the kids' policies and all that stuff, would end too. So we talked about Starbucks, $6 a month, $7 a month. It can kind of eliminate that burden of trying to figure things out in the one of the most stressful times of your life, which is once you lose an employee, once you leave your job or you're terminated or you start your own company. If we go ahead and get this started now, that's one less thing you got to worry about later. Okay.
Exactly.
Um, Brian is asking investment source, which we've already talked about that, guys. You can use insurance as an investment source. So talk to us. It's kind of hard to explain, because every person is different. Everybody's budget is different. But give us a call and we can kind of work out that budget and see kind of where you fall into that program. Okay. Ben, are you getting any questions over there?
I don't see anything coming in, John.
Okay. Let's see. That's all I have. What about, oh, here's one. Parent on child on parents rider. Okay, so this is a good one, Ben. I'm 25 years old. I'm 35 years old. I just had Alicia. I add her on to my life insurance policy. Okay, as a rider, because on the policies, remember when we're out, working with the policies, it may say I can add Alicia onto my policy for the next 18 years or 21 years for really, really cheap. Like what, $5 a month or something? Why should I get it on my own? Or why should I get Alicia a policy when I can just add her on the policy I already have?
Yeah, I run into this a lot with grandparents that will, buy a policy for themselves
Mhm.
and think they're doing a great job, and they are
They
for I
are,
think
yeah.
because they just don't know, and they put a rider on their own policy. Okay, well they die, that policy goes with them.
Oh
So
wow. Okay.
yeah, so we want to make sure, again, having control of the situation or putting your children in control of the situation, having their own policy, I do believe is the best way to go. Does
Yeah.
take a little bit more time, just prepare for that. A couple
Mhm.
more questions if you have multiple kids or grandkids, but I do believe that is the best way to do it is to have individual ownership of those policies, just
Yeah.
in case we don't run into that situation.
Okay, good deal. And just to explain to you guys, it's something we have to also educate our kids too. Like I have this policy for you. You've had this policy for the last 20 years, right? Now you're out of college, you're working, you're making your own money. Can you afford to continue to pay this $20 or $40 or 50 or $100 a month that's going to make sure that in 30 years you're financially stable and together, you know? But if we don't have that conversation, then it doesn't become important to the child either. You know what I mean? Like my mom is paying my policy, but when I turn 21, that's just another bill that I don't want. Like we don't understand the value and what we've set up as the ultimate goal for our child. So Ben,
Well,
let me ask you, at what
yeah,
point is that going to be a conversation that you have with your kids?
the earlier the better, I think is the right answer, John, and whatever the comfort level of obvious of our clients. But I mean, I've had 10-year-old kids, 12-year-old kids sitting in on appointments and say, hey, this is what your parents are trying to set up for you.
Hmm.
Don't take the easy way out and take 20 grand, when you're 21 and
Yeah,
just end it all and then pay
right,
tax on that money.
right.
Uh, is what, and the nice thing about these programs too is they're very customizable. If somebody, needs to reduce the monthly payment
Right.
until they are financially stable, in their 20s,
Mhm.
getting started, then that's something we can do as well. But definitely, the earlier the better, and just showing, hey, this is what your parents or grandparents are doing for you.
Yeah,
Let's get on the same page today, and get them started off right, for
yeah,
sure.
yeah, definitely. So Ben, listen, I think we taught the people something. What do you think?
Oh, great questions. From our audience today, and
Yeah, yeah.
as always, John, you were one of the best interviewers in the business.
Well,
So
me and Alicia, we're out here we're making moves. I have my niece is in the living room. I'm at my parents' house right now, but my niece is in the living room and she came and tried to pick Alicia up earlier, and I told her, no, 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 don't bother Alicia because I need her for this, you know, Teaching Tuesday, and I
yep.
think
Now I know what the surprise was.
yeah, I told you I had a surprise, right? I told you I had a surprise. So listen, guys, we want to say, Ben and I, thank you so much for supporting us with Teaching Tuesday. We're having a good time educating and teaching you guys. If there was something you heard today that taught you something, I want you to share it. Remember what I said last time? The information we give is breaking news. We got to get it out to the masses. Of course, like our videos. Ben, I hear you laughing. It's breaking news. It's a hot topic. Remember, I talked about
Alicia
this
was
last
breaking
week.
news.
I talked about this last week. Some media outlet says hot topic. Well, children and insurance is a hot topic, okay? And we got to get it out to the people. So, guys, we're gonna be here every Tuesday at 10:30 a.m. We're live. Call us, ask us questions, DM us. We'll try to get to them, just like we did for Michael and Michelle. So, We
And
will
if we
take,
didn't get to your question, we will definitely answer it after our broadcast today.
yeah. If we don't get to your question, expect a message back, and we'll get to y'all. Remember, guys, below both Ben and I are going to have our contact information. Text us, email us, DM us. We're here most of the time, so it's not a problem to help you at all. Okay. So, guys, y'all have a fabulous and amazing rest of the Tuesday, and we will see you all next week on Teaching Tuesdays at 10:30 a.m.